For decades, Americans have heard the same message over and over. The US dollar is safe. The US dollar is dominant. The US dollar is untouchable. But something very different is happening right now beneath the surface of global finance. Around the world, countries are quietly moving away from the dollar. Trade deals are shifting. Foreign governments are reducing their holdings of US debt. And for the first time in generations, serious conversations are taking place about replacing the dollar as the world's reserve currency. This is not speculation anymore. It is a real economic transformation unfolding in real time. At major global meetings like Davos, world leaders are no longer speaking with confidence about the future of the dollar. Instead, there is nervousness, warnings, uncertainty. When top U.S. officials openly beg bondholders not to sell American debt, that is not a sign of strength. When the President of the United States says a collapsing dollar could actually be a good thing, that is not reassurance. It is an admission that the old system is cracking. The truth is uncomfortable. America no longer fully controls the financial machine that has supported its economy for more than 70 years. For ordinary Americans, a weaker dollar might sound harmless, but it is not. A falling dollar means higher prices on imported goods. It means your savings buy less. It means the value of your investments can shrink even if stock prices rise. If the market goes up 5% but the dollar loses 5%, you gained nothing. The world outside the United States understands this perfectly, and that is why foreign investors are becoming more cautious. They see the direction America is heading, and many are quietly preparing an exit strategy. Right now, foreign investors own roughly 1/3 of all U.S. Treasury bonds. Nearly 20% of U.S. stocks are held by investors outside America. Huge portions of corporate debt are financed by international money. That means America's financial markets depend heavily on the trust of the rest of the world. If global investors decide to sell U.S. assets and move their money elsewhere, the impact would be enormous. Interest rates would rise, stock markets would struggle, and the U.S. government would find it far harder to finance its massive spending. China understands this better than anyone. For years, Beijing has been quietly building an alternative system. The goal is simple: reduce the world's dependence on the US dollar and increase the global use of China's own currency, the yuan. The strategy is not dramatic or loud. It is slow, steady, and deliberate. China is encouraging other countries to trade using yuan instead of dollars. It is lending money in yuan. It is signing energy and infrastructure deals priced in its own currency. Step by step, the financial foundation of American dominance is being challenged. One of the biggest weapons China has is trade. Last year alone, China recorded a trade surplus of more than $1 trillion. That means the world is buying far more from China than China buys from the world. And to purchase Chinese goods, many countries are beginning to pay in yuan. Every new trade deal settled in Chinese currency weakens the dollar just a little more. Exports now account for a massive share of China's economic growth. The more the world depends on Chinese products, the more it depends on Chinese money. Ironically, America's own policies are accelerating this trend. The ongoing trade war, tariffs, and sanctions were supposed to hurt China. Instead, they are pushing other nations to find alternatives to the U.S. financial system. When America restricts access to dollars or punishes countries for using them, those countries look for new options. Europe, Africa, Asia, and Latin America are increasing trade with China while reducing reliance on the United States. This is exactly the opposite of what Washington intended. Another key piece of the puzzle is global lending. For decades, countries and companies around the world borrowed money in US dollars. That created constant demand for the greenback. Now China is offering loans in yuan instead. More nations are issuing bonds in Chinese currency. More international companies are financing projects through Chinese banks. As this grows, the world's need for dollars slowly declines. Every loan signed in yuan is one less reason to rely on the American financial system. Currency strength is also part of the plan. In the past, China kept its currency intentionally weak to boost exports. But now the strategy is changing. To become a true reserve currency, the yuan must be seen as stable and valuable. That is why China is increasingly supporting a stronger currency. A strong yuan encourages global investors to hold Chinese assets. It makes Chinese bonds more attractive. And it signals to the world that Beijing is serious about replacing the dollar at the center of global finance. Meanwhile, America's economic strategy looks increasingly confused. Publicly, Washington demands that China buy more U.S. products like oil, gas, and agricultural goods. Behind closed doors, American officials are essentially begging for Chinese business. That alone shows how much leverage has shifted. The United States still believes it is dictating terms. But in reality, China now has options. It can buy energy from Russia, the Middle East, Canada, and its own domestic sources. America is no longer the only game in town. Even longtime allies are reconsidering their dependence on the United States. Canada, for example, is exploring new pipelines that would send oil directly to Asia instead of the US market. If that happens, China could gain fast, reliable access to massive new energy supplies. India is being pressured to buy more American oil, but it continues strengthening ties with Russia and the Middle East instead. Across the globe, countries are quietly diversifying away from Washington's economic influence. All of this creates a serious problem for the dollar. The US currency only remains dominant as long as the world needs it. If global trade shifts toward local currencies, if more loans are issued in yuan, and if major economies bypass the dollar entirely, America loses its greatest economic advantage. For decades, the US could print money and borrow cheaply because the world had no alternative. That privilege is now slowly disappearing. The real turning point is psychological. For most of modern history, challenging the dollar seemed impossible. Today, it feels increasingly realistic. China is not trying to destroy the dollar overnight. That would hurt its own economy. Instead, Beijing is patiently building a parallel system. Trade networks, investment channels, currency agreements, payment systems. Bit by bit, a world beyond the dollar is being constructed. None of this means the dollar will vanish tomorrow. America still has the largest economy, the deepest financial markets, the strongest military, and massive global influence. But reserve currency status is based on trust and convenience. If the world begins to trust another system more, the shift could accelerate faster than most people expect. History shows that monetary dominance never lasts forever. For American families and investors, this shift matters deeply. A world with a weaker dollar means higher inflation, higher interest rates, and reduced purchasing power. It means global events will have a greater impact on everyday life in the United States. Ignoring these changes will not stop them. Understanding them is the first step toward protecting yourself. The big question is whether China can truly convince the world to embrace its currency. That will depend on many factors: economic stability, political trust, and whether Beijing allows more financial freedom. But the momentum is undeniable. Every year, more countries sign deals without the dollar. Every year, more central banks hold yuan reserves. The direction is clear, even if the final destination is still uncertain. What we are witnessing is not a single event. It is a long-term transition. The end of unquestioned American financial dominance and the rise of a more divided global system. That process may take years, even decades, but the foundation has already shifted. And once confidence in a reserve currency begins to fade, it rarely returns. So the real question is not whether the dollar will be challenged. That is already happening. The real question is how fast the world will change and how prepared America will be for that new reality. The global financial order is being rewritten in front of us, and for the first time in generations, the United States may not be the one holding the pen.